Hello, my dear friends. I'm sure you all are doing great, my dear friends. Come on. So, friends, in the previous class, we were discussing the concept of exemption. And in fact, in last 2-3 sessions, we have been discussing about a lot of interesting exemptions, but we still have some more points left, which we'll complete in this particular session, my dear friends. Are we all ready, sir? Yes. Come on. So, but before I start exemption, let's once quickly revise and recall what we have done so far, and then we'll proceed, my dear friends. Are we ready? Done. Tell me, guys, what is section 1? Section 1 always talks about short title, extent, and commencement. Section 2 is definitions. Come on, friends. Section 3 is what? Classes of officers. Section 4, appointment of officers. Section 5, powers of officers. Section 6, authorization of state officers to act as proper officers. Section 7, come on, section 7 is what? Supply. And in supply, there are 3 schedules. Schedule 1, Schedule 2, and last one is what? Schedule 3, my dear friends. And an important point which we all know is that Schedule 1 is dealt by Section 7.1c, Schedule 2 is dealt by Section 7.1a, Schedule 3 is dealt by Section 7.2a, and Schedule 1 talks about transactions regarded as supply, even though there is no consideration. Schedule 2 talks about transactions which are either treated as supply of goods or treated as supply of service. Schedule 3 talks about transactions which are neither treated as supply of goods nor treated as supply of service. Clear, my dear friends? Done. Then, what is section 8? Section 8 talks about what? Composite supply and mixed supply. How do we tax composite supply? Composite supply is taxable at the rate of principal supply. How do we tax mixed supply? Mixed supply is taxable at highest rate. And friends, I hope you remember that Section 230 defines what is composite supply. Come on, friends, what is composite supply? Composite supply is that supply where 2 or more taxable supplies are naturally bundled and supplied in conjunction with each other, and one of which is a principal supply. Principal supply is defined by 290, which says that principal supply is that supply which is predominant in nature and others are only ancillary, my dear friends. Clear? Then Section 274 defines what is a mixed supply, which clearly says that mixed supply is a case where 2 or more individual supplies are supplied in conjunction with each other for a single price. For what price? Single price, and it is not a composite supply. Obviously, then only we'll call it as mixed supply. Then Section 9, my dear friends, charge of GST. Section 10, very important, composition scheme. Friends, what is section 252, sir? 252 defines what is goods. Goods cover every kind of movable property other than money and securities, but includes actionable claims, growing crops, grass, and things attached to or forming part of land, which are severed or agreed to be severed before supply or under a contract of supply. Then 256 defines what is India, which clearly says India covers territory, territorial waters, continental shelf, exclusive economic zone, seabed, soil underwater, and airspace above territory and territorial waters. Friends, what is section 2102, guys? Section 2102 defines what is service. Sir, I am revising the definitions once because it has been long time that we revise these definitions. That is why I am revising once again today. Section 2102 is what? Services, which clearly says services means anything other than goods, money, and securities. So securities is not covered in definition of goods and it's not covered in definition of service. Then what is 231? 231 defines what is consideration. Consideration means something in return, which can be in monetary form or non-monetary form. But consideration does not include 2 things, my dear friends. Number 1, refundable deposits unless appropriated. Number 2, subsidy received from central government or state government. Subsidy from whom, sir? Central government or state government. Then 232 talks about continuous supply of goods. Guys, come on, concentrate. Sir, we have revised section number so many times, but we have been long time to revise definitions. That's why I'm spending time. So focus. 232 talks about what, my dear friends? Definition for continuous supply of goods, which says that continuous supply of goods means supply of goods under a contract on recurring basis. Supply of goods under a contract on recurring basis where payment is settled periodically. If you remember, I gave an example called cement dealer is supplying cement bags to a construction company. He'll keep on supplying cement bags every weekly once or 15 days once or monthly once. He'll issue the invoice. Getting clarity, friends? That is the story of section 232, which talks about continuous supply of goods. Then 233, my dear friends, continuous supply of services, which clearly says that to call it as continuous supply of service, there must be a supply of service under a contract on recurring basis for a period more than 3 months. Sir, the word called more than 3 months is not there in continuous supply of goods, but that word is there only in case of continuous supply of service. So practical example for continuous supply of service is annual maintenance contract, because to call it as continuous supply of service, there must be supply of service under a contract on recurring basis for a period more than 3 months. Then only we call it as continuous supply of service. Clear, friends? That is the story of section 233, my dear friends. Clear, right? Then what is section 220, my dear friends? 220 defines what is CTP and 277 defines what is NRTP. If you remember, my dear friends, I told you that CTP NRTP registration is valid only for period specified in the application or 90 days, whichever is earlier. And the said period can be further extended for another maximum 90 days. An interesting concept to know very clearly is that CTP means any person who occasionally undertakes transactions involving supply of goods or services or both in a state or UT where he does not have a fixed place of business. 277 talks about NRTP, where I clearly told you that NRTP means any person who occasionally undertakes transactions involving supply of goods or services or both, but does not have a fixed place of business, or residence in India. Clear, friends? Done. After this, my dear friends, I taught you one very, very interesting definition called section 26. And if you forget this, it is utter nonsense, because this is a very, very important definition. And 26 defines what is aggregate turnover, which clearly says that aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports. Come on, friends. Aggregate turnover covers what, sir? Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports on all India basis. Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports on all India basis under same PAN. But aggregate turnover does not include value of inward supplies on which receiver is liable to pay tax under RCM. And we clearly learned that section 247, which defines exempt supply, which clearly says that exempt supply means those supplies which are exempt under GST law, and also includes non-taxable supply. And non-taxable supply is defined by 278, which says that non-taxable supplies means those supply which are not leviable to tax under GST law. So friends, you need to observe very clearly that aggregate turnover also covers exempt supply. Exempt supply also covers non-taxable supply. That is the reason why alcoholic liquor for human consumption, which is not in GST, and that 5 petroleum products, that is petroleum crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel, even though those are kept outside GST, still we will include for the purpose of calculation of aggregate turnover, because aggregate turnover also covers exempt supply also covers non-taxable supply. That is the reason why alcohol liquor for human consumption and also the petroleum products are included for the purpose of calculation of aggregate turnover. That's it. Getting full clarity, guys? Very good. Come on, friends. I'm sure we got full clarity on all this point, my dear friends. So friends, section 11, we were talking about exemptions. and where I clearly told you that central government has got power to notify list of exemption, and there are hundreds of goods which are exempt, and there are some good number of services also which are exempt. And in our syllabus, we do not have list of exempted goods, but we do have list of exempted services. Clear, friends? In which lot of points already done, but some more points are left, which will complete in this particular session. And what are left is only all small points are left, will complete very soon. Clear? And by the way, what is section 12 to section 14? It talks about time of supply in case of time of supply. 12 is goods, 13 is service, 14 is time of supply for change in rate of tax. 15 is what? Value of supply to be read along with Rule 27 to Rule 35. 16 to 21 input tax credit to be read along with Rule 36 to 45. 22 to 30 is a chapter of registration. 31 to 34 tax invoice, credit note, debit note. 35, 36 yet to talk. 37 to 48 returns. 49 to 52 payment of tax, interest, TDS and TCS. 59 to 66, what my dear friends, assessment and audit. 67 to 72 inspection, search and seizure. 73 to 84 is what my dear friends, demands and recovery. 85 to 94 liability to pay tax in certain cases, and 95 to 106 advance ruling, and 107 to 121 appeals and revisions, and 122 to 138 penalties, offences and prosecution. Clear with all these points, friends? Done. Let's proceed and discuss the balance exemptions points what we have. Are we ready, sir? Let's go back. So friends, from starting, if you look at, we are done with 1, 2, 3, 4, 5, 6, 7, 8. These all points are over. In fact, 10A point also I taught you, my dear friends. 11 also done, 11A also done. 11, if you remember, I told the story of fair price shop, ration shops, where they give service to central government or state government by way of sale of food grains, sugar, kerosene, any products, where they get commission or margin, which is purely exempt. Then 12, 13, 14, 13th is very important, 14th also important, of course. 15th one also done. Embarking from or terminating in airport located where, sir? Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or Bagdogra located in West Bengal. And next point we learnt about non-AC bus GST will apply. Non-AC bus GST will not apply. AC bus GST will apply, because we learnt about stage carriage other than air-conditioned stage carriage. So if we go in AC bus, GST will apply, but if we go in non-AC bus, GST will not apply. Then 16th point, we discussed a lot in detail about regional connectivity scheme airport. Whenever government sets up new airport, they want airline companies to operate the flights, for which government is giving consideration in the form of viability gap funding. And that exemption is only for a period of 3 years. I already discussed this point in detail, sir. Done. 17, 18, 19, 20, 21. 21st point, we spoke a lot about the story of person wise limit is 750, carriage wise limit is 1500, for which already I gave some good number of examples, my dear friends, and I hope we remember that examples where person wise, otherwise consignee wise limit is 750 and carriage wise limit is 1500. Then 21B also done. 23, 24, lot of points we completed already. Come on, look at 27A, my dear friends. Service provided by a banking company. Service provided by what, sir? Banking company. To whom, my dear friends? That's important. Banking company to basic savings bank deposit account holders. Sir, it's only basic savings bank deposit account, not current account. Only basic savings bank deposit account. That too under what, my dear friends? That is important. That too under Pradhan Mantri Jan Dhan Yojana. You would have heard this word called Pradhan Mantri Jan Dhan Yojana. That is a scheme formed by central government where they were opening bank accounts for people in rural areas. The whole idea was making sure that every person will have a bank account so that we will promote digital India. So services provided by banking company to basic saving bank account holders under Pradhan Mantri Jan Dhan Yojana will be exempt. Then 28th point, my dear friends. See that, come on. Services of life insurance business. Services of what, sir? Life insurance business provided by way of annuity. Under this point is important. National Pension System. In short, we call it as NPS. Regulated by Pension Fund Regulatory and Development Authority of India under Pension Fund Regulatory and Development Authority Act 2018. Services of life insurance business provided by way of annuity by National Pension System. Obviously, we learnt that services by SEBI is exempt, services by ESI Corporation is exempt, services by Employee Provident Fund Organization is exempt. All government regulatory bodies, all government bodies, whatever services are given by them, it is straight away exempt, my dear friends. This is an interesting point. 29th point, my dear friends. Services of life insurance business provided or agreed to be provided by whom, sir? Army, Naval. Sir, Army people, Naval Force. Naval is the water force, submarines. You would have seen one movie called Ghazi Attack. In that we will see this Navy force. So one point I'll tell you is that when we talk about Army or Navy, how much ever we give to them, it is less only. Because they are sitting at the border and working for us. They are protecting our country. So whatever we give to them, it is always less. So what is the exemption given to them? Services of life insurance business. Obviously, life insurance is something what is very much required for them because they are risking their life and standing for us. See that? Services of life insurance business provided or agreed to be provided by Army, Naval and Air Force. Come on friends, Army, Naval and Air Force group insurance funds. Army, Naval and Air Force group insurance fund to members of Army, Navy and Air Force respectively under group insurance scheme of central government. Very much sensible. Give to them, boss, give to them. How much ever you give to them, it is always less only. Then 29A, my dear friends, service of life insurance provided or agreed to provided by Naval Group Insurance Funds. Naval Group Insurance Funds to personnel of Coast Guards, coastal guards who stand at the areas where through coastal areas where other country people can enter into our country. Clear friends? Service of what? Life insurance provided or agreed to be provided by Naval Group Insurance Funds to personnel of Coast Guard under group insurance scheme of central government. That is also exempt. Done, my dear friends. So please understand that almost all the major points are done. Only few points are only left out. That will complete in this session. Clear? Done. 30, 31, 31B, 33, 34, 35. This all we have done. And already I marked very important points for you there. So till 36A, we completed all the points there. Clear, sir? Done. Friends, before I proceed to next point of 37, one more small interesting amendment is there which I wanted to look at. So from all these amendments related to our story of exemptions, my dear friends, all the points I told you, but one more interesting point is there, that also we'll talk. FIFA World Cup I explained you, this already we discussed, 30th September point I told, and for state transport undertaking we discussed about motor vehicle meant to carry more than 12 passengers. One more thing added was electrically operated vehicle given to a local authority. Then, one last thing, exemption point, please see that. Service of life insurance. Service of what, sir? Life insurance provided or agreed to be provided by the Central Armed Police Forces. Sir, when exemption was given for Army, Naval, they also thought exemption should be given even for Police Force also. The Police Force also very important for us. Provided by Central Service of Life Insurance Business, provided or agreed to be provided by Central Armed Police Forces under Ministry of Home Affairs Group Insurance Fund to their members under Group Insurance Scheme of concerned Central Armed Police Force. That's it. Getting clarity, friends? This is also exempt. An interesting point. Clear? Done, my dear friends. And already I told you about Bangla Sasya Bima. Admission ticket already covered. That's it. With this, amendments related to exemptions are also discussed with you. Clear, friends? Let's move to next point. Come on. So, friends, now let's look at point number 37, my dear friends. Come on. What does 37 talk about? 37 talks about service by way of, what is that word? Services by way of collection of contribution. Services by way of collection of contribution under Atal Pension Yojana. Very, very interesting pension scheme found by government, and the name is Atal Pension Yojana because this pension scheme was named after our great leader called Atal Bihari Vajpayee. That's where the scheme is named as Atal Pension Yojana. Getting clarity, friends? Good. Next point. Services by way of collection of contribution under a pension scheme of state government. So ultimately what you have to understand is for government schemes, they always give exemptions. Then 39th point, my dear friends, look at that. Services by following persons in respective capacity. So this point is very important. Kindly please concentrate and focus. Extremely important point. Business facilitator. Come on, friends, what is the name, sir? The name is business facilitator or a business correspondent. Business facilitator or a business correspondent to a banking company with respect to its accounts in rural area branch. Already we learnt in the concept of reverse charge mechanism that when service is given by a business facilitator to a banking company, that service is covered under RCM. But interesting point, what we are learning now is about business facilitator or business correspondent is giving service to a banking company with respect to accounts in its what branch? Rural area branch. If it is with respect to accounts in rural area branch, it is exempt. Urban area branch, then only it is taxable. Moreover, urban area branch will tax only under RCM. Clear, friends? Then any person as an intermediary to a business facilitator or a business correspondent with respect to service mentioned in entry A above, and entry A talks about with respect to accounts in rural area branch. Correct, right? Then business facilitator or business correspondent to insurance company in what area? Rural area. So everywhere they are talking only about rural area. So exemption is given only for rural area branch, my dear friends. Clear? I'm sure this point makes sense for all of us. Very good. Then 39th point, my dear friends. 39A, I mean to say. This is an interesting point. Latest point. Kindly please concentrate. Services by an intermediary of financial services located in multi-services. This is SEZ, my dear friends. SEZ stands for Special Economic Zone. Services by an intermediary of financial services located in multi-services Special Economic Zone with IFSC status. I repeat one more time, what status, guys? IFSC status. So let me talk about what is IFSC. IFSC stands for International Financial Services Center. In fact, it is set up in India, in Gujarat. In Gujarat, this is set up where International Financial Service Center, International Financial Service Center is set up in Gujarat. And what this IFSC actually does, they provide service to customers located outside India and where they deal only in foreign currency, my dear friends. Getting clarity, sir? See now, come on. Services by an intermediary of financial services located in multi-services SEZ with IFSC status to a customer located outside India for international financial services in currency other than Indian rupees. Obviously, I just told you that they'll only deal in foreign currency. For the purpose of this entry, IFSC is a person. International financial service in IFSC is a person who is permitted or recognized as such by government of India or any regulatory appointed for regulation of IFSC, then who is treated as a person resident outside India under foreign exchange management regulations, then who is registered under Insurance Regulatory Development Authority of India, IRDA, as IFSC Insurance Office, or last point, who is permitted as such by SEBI, under a Securities Exchange Board of India guidelines. Correct, my dear friends? So exemption is basically given for whom, my dear friends? Services given by intermediary of financial services located in multi-service SCZ with international financial service center status to a customer located outside India for international financial services in currency other than Indian rupees. That service is exempt. Clear, my dear friends? Speak out. So basically what is happening here is that intermediary of financial service is providing service to a customer who is outside India. And what service is being given, my dear friends? What service? Service is basically international financial services are given, and that too in a currency other than Indian rupees. That too in a currency other than what, my dear friends? Indian rupees. That's it. That is the story of this particular point, my dear friends. Come on, friends. We are done with point number 39A, my dear friends. Before we move on to next point, let's once look at any FAQs which are left out. Let's look at that once. Come on. If I look at FAQs, first one is done. 2, 3, 4, 5, 6 also over. 7th one you see, my dear friends. RR Limited, our insurance company, provide life insurance business to its client. Such service is exempt if company is under what, my dear friends? National pension system. If it is under a national pension system regulated by Pension Fund Regulatory Development Authority of India. So exemption is only when if it is regulated by Pension Fund Regulatory and Development Authority of India. That's it. Clear with this, my dear friends? Good. 8, 9, 10, 11, 12 already done. 13th one we'll talk. For 13th one we require some more knowledge, my dear friends. Come on, look at next one. We are looking at point number 40, my dear friends. Come on, see that. 40th point we are looking at. Services provided to central government, state government and union territory. Service provided to central government, state government, union territory under any insurance scheme. I underline that word. I'll highlight that word called insurance scheme. Under any what scheme, sir? Insurance scheme for which total premium is paid by central government, state government and union territory. So if government takes any insurance policy, I repeat one more time, if government takes any insurance policy, one more time I repeat, sir, if government takes any insurance policy and on that insurance policy, government is paying premium, on that GST will not apply. Getting clarity, friends? Good. Next one, 41st point, my dear friends. See that upfront amount called as premium, salami, cost, price, development charges or by any other name payable in respect of the service by way of granting long-term lease. Long-term lease means how many years? Long-term lease of 30 years or more. That is important. 30 years or more of what plots, sir? Industrial plots. That's very common. Generally, government always gives industrial plots on long-term lease for development of industries, for development of infrastructure, for financial business provided by state government industrial development corporation or undertaking or by an entity having 50% or more ownership of central government, state government, union territory to industrial units or developers in any industrial or financial business area. And for this purpose, central government, state government, union territory shall have 50% or more ownership in an entity directly or through an entity which is wholly owned by central government, state government or union territory. Clear, friends? And one special point you see below, aforesaid exemption is admissible. I repeat one more time, aforesaid exemption is admissible irrespective of whether such upfront amount is payable or paid in one or more installments, provided the amount is determined upfront. So we are basically talking about granting of long-term lease of industrial plots, and long-term lease basically means 30 years or more, and exemption is given provided exemption is upfront, amount is upfront decided, and upfront amount can be paid in one or more installments, but amount should be determined upfront. I repeat one more time, friends. Upfront amount can be paid in one or more installments, but amount should be determined upfront. Very, very interesting point, friends. Clear? Done. To teach next point, I should teach you something. What is that? Listen very clearly, kindly concentrate. Sir, there is a landlord who has got some land. Now, there is a developer who is basically like a real estate business. Now, one very practical point which I'll tell you is that this landlord enter into an agreement with the developer which is known as joint development agreement. This is very, very popular, in short known as JDA. Friends, JDA stands for Joint Development Agreement. Sir, one point you have to understand is that if the landlord or the owner sells a land to developer, if the landlord or owner on sale of land, definitely what will happen is no GST. Why no GST? For the simple reason and fact, we know very clearly that as per section 7.2a read with schedule 3, we have got one point called sale of land and building. But we are talking about a special case of joint development agreement. Joint development agreement means what will happen is, for example, on this land, let's say one apartment is constructed by developer and flats are shared between landlord and developer. Come on, my dear friends. What is the interesting point I am writing here, sir? Come on, please understand, please kindly concentrate. What is the language I wrote there? Apartment is constructed by whom, sir? Apartment is constructed by developer. And whatever flats are coming, that flats are shared by landlord and developer. And why do they share? Logic is very simple. Because the land belongs to the landlord. He is giving land. And developer also will take some flats because developer is investing money for construction. So one person is the owner of land. One person is investing money for construction. So both of them are coming together for getting apartments ready. Both of them are coming together for getting apartments ready. That is why it is called as joint development agreement. Getting clarity, friends? Now if you observe carefully, there is a service by landlord to developer. There is a service to what, sir? Landlord to developer by way of transfer of development rights. Correct, my dear friends? You have to observe this point very clearly that landlord is giving one right to developer. What right he is giving? He is giving a right called development rights, for which landlord will get consideration. Correct or not, friends? Come on. Next page I'll write something. Listen, I want to write all the points, but first listen. Sir, let's say if 100 flats are constructed, if 100 flats are what, sir? Constructed, then what is happening is, let's say 60 flats are taken by developer and 40 flats are taken by 40 flats are for landlords. Now an interesting point what I'll tell you is that this 40 flats what landlord is getting, this 40 flats, maybe this 40 flats, what landlord is getting, what the landlord is getting might be sold before completion, otherwise might be sold before completion certificate or might be sold after completion certificate. And we all know that if it is sold before completion certificate, then we know that GST will apply, because we all know the concept that construction of complex or any building or any civil structure, on that GST will apply, except where, I repeat one more time, except where entire consideration is received, except where entire consideration is received after issuance of completion certificate, except where entire consideration is received after issuance of completion certificate by the competent authority. So in this case GST will apply, but in this case GST will not apply. In this case GST will not apply on sale of flats. Correct, my dear friends? Now interesting point what they told is that, now listen, now carefully listen. There is a landlord, and he is transferring, there is a landlord and there is a transfer of development rights to the developer. Correct, my dear friends? Now interesting point is that question is all about, on this will GST apply? That is the primary question what we are trying to answer. Otherwise, we are trying to answer a question whether transfer of development rights attracts GST or not. Now for this, my dear friends, an interesting point what law told is that to the extent of flats sold by landlord, to the extent of what, sir? Flats sold, I repeat one more time, to the extent of flats sold by landlord prior to completion certificate, it is not taxable. Other line, very clearly listen, my dear friends, to the extent of flats sold, to the extent of flats sold by landlord after completion certificate, it will be taxable. Other words, my dear friends, simple language I'll tell you, listen very clearly, concentrate, my dear friends. Sir, in my example sometime back, 100 flats are constructed. How many flats are given to landlord? 40 flats are given to landlord. Correct, my dear friends? Now interesting point is, when 40 flats landlord received, I repeat one more time, when 40 flats landlord received, assume for a second 30 flats sold before CC, then what will happen? On flat GST will apply. Correct or not? And on 10 flats sold after completion certificate, on this what will happen? GST will not apply. That means on flat GST will not apply. Come on, my dear friends, very interesting concept. Listen very clearly, kindly please concentrate. If you don't focus, nothing you will understand. So listen to my point very clearly and very carefully, sir. I repeat one more time, what I am telling very clearly is that something like this. Listen, out of total flats what landlord has got, out of total flats what landlord has got, out of total flats what landlord has got, 40 flats, 30 flats are sold before OC. On the 30 flats, will GST apply? Yes. And 10 flats are sold after OC. On the 10, will GST apply? No. So on flat, GST will not apply. Clear cut point. On flat, GST will not apply. Now what they told is that on 30 flats, did you pay GST? Yes. So what they told is, on this 30 flats, development rights is exempt. Next line. On this 10 flats, did you pay GST, my dear friends? On this 10 flats, GST is paid? No. So what will happen? To the extent of this 10 flats, to the extent of is what, sir? 10 flats, development rights. I repeat one more time, friends. To the extent of his 10 flats, development rights are taxable. Moreover, it will be taxable under RCM, my dear friends. Very, very interesting and important point. RCM means who is liable? Developer is liable. Come on, friends. I repeat one more time this concept. Listen very, very clearly, sir. Sir, if there is a landlord who has got one piece of land, if he sells that land, on the GST will not come, because we know that as per section 7(2)(a) read with schedule 3, sale of land and building is neither regarded as supply of goods nor regarded as supply of service. That means on the GST will not apply. Now interesting point, what I am trying to discuss with you is that, listen, owner or the landlord or the owner of the land, he is entering into an agreement with the developer, and the agreement is known as joint development agreement. Joint development agreement is that agreement. Joint development agreement is that agreement where developer, owner come together, where developer constructs some apartments or flats or commercial building, then the area or the flats will be shared by the owner and the developer. Area or the land, area or the flats will be shared by owner and developer. Now if you observe carefully, there is an activity called transfer of development rights. Transfer of what, sir? Development rights by landlord to developer. I repeat one more time, there is a transfer of development rights by landlord to developer. Now what law told is that for the tax treatment of development rights, what they told, first to check how many flats owner has got. Out of the flats what owner has got, please check how many are sold before OC, and also check how many are sold after OC. Because whatever flats are sold before OC, OC means occupancy certificate, or CC completion certificate. Listen, whatever flats are sold before CC or OC, whatever flats are sold before CC or OC, on that flat GST will apply. And to that extent, development rights will not be taxable. Development rights will not be taxable. And whatever flats are sold after completion certificate, on the flat you will not pay GST. So to the extent related to the 10 flats on the development rights, GST will apply. That too, moreover, it is taxable under RCM, where RCM stands for reverse charge mechanism. Getting clarity, friends? Very, very interesting point. Now I want to read that point once, then I'll make you write. Supply of TDR. TDR stands for transferable development rights. Transferable what rights? Development rights. Transferable development rights, or FSI. FSI stands for floor space index. Floor space index. Area of floor is being shared, or long-term lease of land by whom, sir? By a landlord to a developer. By a landlord to a developer are exempt, subject to the condition that constructed flats are sold before issuance of completion certificate and tax is paid on them. So meaning of this concept is that in case where on the flats you paid GST, on the flat, I mean we are talking about owner point of view. From owner point of view, on the flat if you paid GST, development rights not taxable. On the flat, if you have not paid GST, development right is taxable. So friends, finally, to give a conclusion, my dear friends, from owner standpoint, we are dividing that into two categories. On flats received, owner on flats received, first case, GST paid. On flats received and sold, of course, owner got his share of flats and he sold that share of flats, GST paid, other side GST not paid. And common sense point, when will GST be paid? Common sense point, GST will be paid only when flat is sold prior to completion certificate. And on flat, if GST is paid, development rights are exempt. On flat, if GST is not paid, development rights are taxable. That's it. This is what is the complete summary of entire concept, whatever I told you so far. Come on friends, very interesting point. Supply of TDR, FSI or long-term lease of land by landlord to a developer are exempt, subject to the condition that constructed flats are sold before issuance of completion certificate and tax is paid on them. Clear, my dear friends? So you have to observe that on flat, if GST is paid, development rights are exempt. On flat, if GST is not paid, development rights are taxable. Moreover, it is taxable under RCM, that is developer is liable to pay. That's it. Going back, what is the line, my dear friends? Exemption shall be withdrawn in case of flats sold after issuance of completion certificate. I clearly told you this point. So much time I spent because very interesting and very important. But such withdrawal shall be limited to 1% of value in case of affordable houses and 5% of value in case of other than affordable houses. Affordable houses, as per law, there is a definition for affordable housing, a small house less than 300-400 square feet. There is a criteria for that, how much square feet should be there to be called as affordable houses. Clear, friends? So for affordable houses, limited to what percent? 1% of value. And other than affordable houses, it's limited to 5% of value. Clear, friends? Done. Going back, I definitely want you to write this point, my dear friends. Come on. You can put side heading joint development agreements and take this point. Extremely important. No games at all. Come on, friends. Please write down this. Put the heading as joint development agreement and take these points. Very interesting and important points, my dear friends. Makes lot of sense actually. And very practical. Very practical. Should I scroll, my dear friends? Come on. So clearly you can see that there is a service. There is clearly a service by landlord to developer by way of transfer of what, my dear friends? Development rights. That's a clear-cut point. And below I give an example where 100 flats are constructed, 60 flats are taken by developer and 40 flats are for landlord. And we all know that if the flat is sold before completion certificate, then definitely GST will come. But if it is sold after completion certificate, GST will not apply. We know this concept already. Clear, right? Done. So friends, I want you to take finally this very, very important concept here. Extremely important. Take it, come on. Clear, my dear friends? Come on, makes sense, right? Extremely wonderful concept, because we are trying to talk about the taxability of transfer of development rights. Something very interesting and important. Finally, below this, my dear friends, I want you to take the last conclusion, my dear friends, which is interesting. This conclusion I wrote in a simple manner, which gives you straightforward, complete concept. Take this, come on, quick, write down, finish off. So on flats received and sold, on the flat if GST is paid, development rights are exempt. On the flat if GST is not paid, development rights are taxable. Moreover, we will tax under RCM. Done, my dear friends. Let me proceed. Yes, friends, come on. I'm sure we got full clarity on this concept of transfer of development rights, my dear friends. Very good. So what is the final conclusion of this point, my dear friends? On flats received and sold, on the flat if GST is paid, development rights are exempt. I repeat one more time, on flat, on what, sir? On flat if GST is paid. On flat if GST is paid, development rights are exempt. But on flat if GST is not paid, on flat if GST is not paid, then development rights are taxable. Moreover, it will definitely be taxable under RCM, that is, developer is liable to pay. Going back, exemption is limited to, withdrawal is limited to what, sir? 1% of value for affordable housing. Affordable housing is something like generally 90 square meters house. That's something like that. We call it as affordable housing. And 5% of value in case of other than affordable houses. Done. Next point, come on. Next point, 42nd point is not there because once upon a time there was some exemption related to spectrum license fee, which is not there now. So leave it. Next point, 43rd, my dear friends. Services of leasing of assets. What assets? Rolling stock assets, including wagons, including what, sir? Wagons, coaches or locos. Locos is basically the motors. By whom, my dear friends? Indian Railway Finance Corporation. I repeat one more time. By whom, sir? By Indian Railways Finance Corporation to Indian Railways. Very, very interesting point. Come on, friends, kindly please listen. Services of what, sir? Services of leasing of assets. Services of what? Leasing of assets. What assets? That to rolling stock assets. Rolling stock assets, including wagons. Including what? Wagons, coaches, locos. Including wagons, coaches, locos by Indian Railway Finance Corporation to Indian Railways. So when it is given by Indian Railway Finance Corporation to Indian Railways, that is straight away exempt, guys. Next line. 44th point. Interesting, important. See that. Service provided by an incubatee. Friends, when I use the word incubatee, incubatee refers to a new startup entity. Startup. Basically, you know that whenever there are newborn babies are put in a box called incubator. Same like that, even for newborn companies, startups, definitely they require some support from the government. So what they do is something like this. Services provided by an incubatee up to total turnover of 50 lakhs in the financial year, subject to the following conditions. What is the condition? Come on. Total turnover has not exceeded 50 lakhs during the preceding financial year. I repeat one more time. Total turnover. One more time I repeat, sir. Total turnover had not exceeded 50 lakhs during preceding financial year, and a period of 3 years has not elapsed from date of entry into an agreement as incubating. So exemption is only for a period of 3 years. Period of 3 years has not elapsed from the date of entering into an agreement as an incubating. Clear, friends? Done. So exemption is only up to turnover of 50 lakhs, provided turnover does not exceed 50 lakhs in the preceding financial year, and moreover a period of 3 years. How many years? 3 years has not lapsed from the date of entering into an agreement as an incubating. That's it. 45th point, 46, 47, 48, all these points done. Come on, friends, let's look at 53A, my dear friends. Which point we're looking at? 53A. Services by way of fumigation. Sir, fumigation is something like a smoke what is put so as to make sure the insects or any flies will not come. Smoke, guys, smoke. A lot of times you see on the road also, they put the smoke and go. Exactly. Services by way of fumigation in a warehouse of agricultural produce. So service by way of fumigation in warehouse of agricultural produce, that is also exempt, my dear friends. Getting clarity? Good. Next point, 54th point, very, very important. Extremely important point. High possibility a question can come in the exam. So kindly please concentrate. Services relating to cultivation. Service relating to what? Cultivation of plants. Service relating to cultivation of plants and rearing of all life forms of animals except rearing of horses. That means what? Service relating to cultivation of plants. That means we are talking about service given by farmer, and rearing of all animals except what? Horses. So for horse, no exemption is being given because first of all, horse is a very costly animal, and if you are maintaining horse means you are a big person. If you are maintaining horse means you are actually a big person. Exactly. Come on. What is covered here, sir? Services relating to cultivation of plants and rearing of all life forms of animals except rearing of horses. For food, fiber, fuel, raw material or other similar products or agricultural produce. I repeat one more time, friends. Service relating to cultivation of plants and rearing of all life forms of animals except rearing of horses. For food, fiber, fuel, raw material or other similar products or agricultural produce by way of what, sir? Agricultural operation directly linked to production of any agricultural produce, including cultivation, harvesting, threshing, plant production or testing. This word testing came in exam one time, where they use the word called soil testing. They just use the word called testing. Testing can be any type of testing, soil testing, seed testing, whatever testing it is. Clear? Then supply of farm labor, that means basically supply of farmers. Then process carried out at an agricultural farm, including tending, pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigating, curing, sorting, grading, cooling or bulk packaging, all kinds of activities which are taken up or done at the farm, like tending, pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigating, curing, sorting, grading, cooling, bulk packaging, and such other characteristics which do not alter, I underline that word, which do not alter essential characteristic of agriculture produce. That means tomato should be tomato only, but tomato should not become tomato ketchup, Potato should be potato only, but not potato chips. Tea leaves should be tea leaves only, but not tea powder. Coffee beans should be coffee beans only, but not coffee powder. But make it only marketable for primary market. Next slide. Renting or leasing of agro machinery. Friends, what does agro machinery mean? Agro machinery is something like agricultural implements, something like example a tractor or any agricultural implements. Getting clarity, friends? Come on, see that? Renting. Come on, guys, can you please concentrate? Renting or leasing of agro machinery or vacant land with or without a structure incidental to its what, my dear friends? Use. Vacant land also is covered, but one point I'll ask you here, think properly and tell me. Mr. X, he has got one vacant land, and that vacant land he has given it on rent to Mr. Y, and Y is actually doing the activity of dairy farming. Dairy farming basically is like maintaining cows and buffaloes. So vacant land is given on rent for the purpose of dairy farming. On this rent, speak out, guys, will GST apply? Straight away my answer is without any second thought, exempt, because renting of vacant land with or without structure for incidental to its use for agricultural activity or for rearing of all life forms of animals, it is exempt. But one time a question came in exam, renting of vacant land to a stud farm. I repeat one more time, renting of vacant land to a stud farm or stable. This will definitely become taxable, my dear friends. Now don't think too much what is a stud farm or a stable. Such stud farm or stable is nothing but a place where horses are kept. A place where horses are kept is called as a stud farm or stable. Clear, friends? Come on, what is the point covered here? Renting of vacant land to a stud farm or stable is definitely taxable. Clear, friends? Because we have to understand that exemption is given only for agricultural operations, and also exemption is given for leasing out or renting out for any purpose or for rearing of any animals, rearing of all types of animals except horses. Rearing of horses is not covered at all. So if we give a rent of vacant land to a stud farm or stable, it's definitely taxable. Stud farm or stable is nothing but place where horses are kept. Place where horses are kept is called as stud farm or stable. Exactly. Getting clarity, guys? Speak out, come on. Very interesting point, guys, which actually makes lot of sense. And I hope we got good clarity on this point, sir. Clear? Good. Take it, come on, write down once. It's an interesting point. I want you to write once, come on. Please don't relax. Please do write once. Please do write, friends, come on. Very interesting, because what is covered in this point is only agricultural operation, and also they covered rearing of all life forms of animal except rearing of horses. Horse is not covered at all. Are we all clear with this point, my dear friends? Everybody please speak out. Very, very interesting and wonderful point, my dear friends. No doubt about it. So what is covered here? Renting of vacant land to what, sir? Renting of vacant land to a stud farm or stable is always taxable. And stud farm or stable is a place where horses are kept, my dear friends. Clear? Makes sense, right? Good, come on. Let me proceed. Next slide. Loading, unloading, packing, storage. I repeat one more time, sir. Loading, unloading, packing, storage, or warehousing of agricultural produce. Already we learnt one more point, separate point we learnt already about the point of loading, unloading, packing, storage, or warehousing of rice. One separate point was there for rice, for the reason because rice is not an agricultural produce. Clear? Then agriculture extension, agricultural, come on friends, agricultural, what my dear friends? Extension services. Come on friends, when I talk about agricultural extension services basically covers something like one second. Agricultural extension services basically covers training of farmers. Example, Shivateja actually taking classes for CA students. When I'm taking classes for CA students, I'm required to pay GST. But instead of taking class for CA student, if I start taking training of farmers on new technology, new development, better crop utility, better crop output, that kind of things I take, then definitely it becomes exempt, my dear friends. Then services by any agriculture produce marketing committee. Important, see that. Services by any agriculture produce marketing committee or board, or services provided by commission agent for sale or purchase of agricultural produce. Getting clarity, friends? So this point is completely related to what, my dear friends? Completely related to what, sir? Agricultural activities. Come on. So let's say there is one person called Mr. Akash. This person called Akash has earned commission income of 25 lakhs, of which 10 lakhs is from sale of tomatoes and 15 lakhs is from sale of tomato ketchup. So what will happen, my dear friends, in this example? Come on. Obviously what will happen is this 10 lakhs will be exempt because commission earned by commission agent for sale of agriculture produce will be straight away exempt. But whereas when I talk about 15 lakhs, it becomes taxable for a simple fact and reason that, come on friends, for a simple fact and reason that tomato is an agricultural product, whereas tomato ketchup is not an agricultural product. I repeat one more time, friends. Tomato is agriculture product, but tomato ketchup is not an agricultural product. So GST will apply on 15 lakhs, but GST will not apply on 10 lakhs because sale of tomatoes, on that if you get commission income, that commission is straight away exempt. Come on friends, just take this example once. Interesting point, small points, but very interesting, very powerful. No games at all. Please take it. So Akash has earned commission income of 25 lakhs, of which 10 lakhs is from sale of tomatoes and 15 lakhs is from sale of tomato ketchup. So 10 lakhs will be exempt, whereas 15 lakhs will be taxable. That's it. Clear? Can I proceed and move forward? Done. Going back, come on. Service relating to cultivation of plants and rearing of all life forms of animals except rearing of horses for food, fiber, fuel, raw material or other similar products or agricultural produce by way of what? First point talks about agricultural operations. Next one talks about supply of farm labor. Next one talks about process carried out at agricultural farm. Then renting or leasing of agro machinery or vacant land. Then loading, unloading, packing, storage or warehousing of agricultural produce. Next one is agricultural extension services that talks about training of farmers. Finally, service provided by agriculture produce marketing committee or board or services by commission agent for sale or purchase of agricultural produce. Are we clear with this point, friends? Speak out. Very good, come on. Next point. 55th point, my dear friends. Carrying out an intermediate production process as job work. I repeat one more time. Intermediate production process as job work in relation to cultivation of plants and rearing of all animals except obviously rearing of horses. So carrying out intermediate production process as a job work in relation to cultivation of plants and rearing of all life forms of animals except rearing of horses. Obviously for food, fiber, fuel, raw material or other similar products or agricultural produce. That's it. I hope we got good clarity on this point, my dear friends. Very, very interesting. Then 55A, my dear friends, services by way of artificial insemination. I repeat one more time, service by way of artificial insemination of livestock other than horses. So insemination is something like test tube babies. Test tube babies which are born. That is common even in case of livestock also. But exemption is not applicable for horses. Clear, friends? Done. Next point, my dear friends, point number 60. Look at that. Services by a specified organization in respect of a religious pilgrimage. Very interesting word. Religious pilgrimage facilitated by Ministry of External Affairs, Government of India under bilateral agreements. Very interesting point. Friends, practically we have got one committee called Hajj Committee of India, which actually provides services to category of people who want to travel to Makkah. Because generally in Muslim community it is very popular and common that they always have a belief that they wanted to go to Makkah, that is Saudi Arabia, and pray to God and come back. In the same manner, even for Hindus also, there is a concept of Manasarovar. So these are basically services given by Hajj Committee of India, services given by Manasarovar Committee, services given by a specified organization. Specified organization in respect of what? In respect of a religious pilgrimage. Religious pilgrimage facilitated by Ministry of External Affairs. Ministry of External Affairs, Government of India, under what agreement, friends? Bilateral agreement. So any service given by them will be straight away exempt. Friends, I am sure we are getting clarity on this point. Good. Next, 61st point. And friends, 61st point is a very, very, very important point. See that? Service provided by central government, state government, union territory or local authority by way of issuance of passport. Come on, friends, see that? Service provided by central government, state government, union territory or local authority by way of issuance of passport, visa, driving license, birth certificate and death certificate. So these kind of things, my dear friends, there is no question of GST. So when service is given by government by way of issuance of passport, something important to go to foreign country, visa, it's a permission given to enter into foreign country or foreigners to enter into India, driving license Birth certificate, last one of course, we can't take, that is death certificate. Someone else will take on our behalf. Exactly. So let me give a practical example. When my son was born, my son is actually a post GST boy. I mean to say, he is born after 1st of July 2017. When he was born, in order to get birth certificate, I actually went to the municipal office and I paid some application charges. On the application charges, they did not take GST from me. The reason being very clear that it is exempt. Passport, visa, driving license, birth certificate and death certificate. Remember these points, very important. Come on. Services provided by central government, state government, union territory or local authority by way of issuance of passport, visa, driving license, birth certificate or death certificate. Clear? Done. Sir, one FAQ is there on this point, my dear friends. See this, come on. Mr. Lal, what a lovely name. Mr. Lal applied for passport and paid a fees of 1,500 at the passport office. As services were specifically exempt under entry number 61 of notification, no GST will be levied on this transaction because services given by central government, state government, union territory or local authority by way of issuance of passport, visa, driving license, birth certificate and death certificate, that service will be exempt. Next, going back, few more points are left, my dear friends. Come on. Point number 62, my dear friends. Service provided by central government, state government, union territory or local authority by way of, very interesting word, by way of tolerating non-performance of a contract for which consideration is in the form of fines or liquidated damages is payable to central government, state government, union territory or local authority under such contract. Come on friends, I will give an example here. Listen. Listen friends. Sir, let's say there is one person called Mr. Anand. What he has done is, he purchased a new bike, and since he purchased a new bike, he was way too excited. What he has done is, on a road, he started traveling, or he started riding, better word, he started riding without helmet. Come on my dear friends, what he has done my dear friends? He started riding without a helmet, and if a person goes without helmet, there is a fine of, let's say, 1,000 rupees what needs to be paid. Now we have to understand that Mr. Anand was supposed to follow provision of the law where he was supposed to carry a helmet or wear a helmet while driving the vehicle, but he started going without helmets. So what has happened? One traffic police has stopped the vehicle and he took a fine of 1,000 rupees, telling that boss, you started going on the bike without paying a helmet, please pay a fine of 1,000 rupees. Now interesting point to be noted is that on this fine, GST will not apply. Come on friends, what is the language I wrote say? On this fine, GST will not apply. On this fine, why GST will not apply? Government is tolerating your non-performance of contracts, where you are supposed to go on a helmet, but you started going without helmets and you paid fine. On this fees, they don't charge GST, guys. Getting clarity, friends? Speak out. Very good. Come on, take the example. So whenever government is tolerating non-performance of the contract and where they are taking consideration in the form of fines or liquidated damages, on that GST will not apply. Small points, but very interesting points. No doubt about it. Clear? Can I proceed and move forward, sir? Done. Let me go back. Service provided by, I'll read that line once again. Service provided by central government, state government, union territory or local authority by way of tolerating non-performance of contract for which consideration in the form of fines or liquidated damages is payable to central government, state government, union territory or local authority. Very interesting. Then 63rd point, services provided by central government, state government, union territory or local authority, generally they all come together only by way of assignment of rights. What they are doing, sir? They are assigning some right to use natural resources to an individual farmer for cultivation of plants. For cultivation of what? Plants. And rearing of all life forms of animals except rearing of horses. So basically, what service government is giving, sir? Government is giving service by way of assignment of right. By way of what, sir? Assignment of right. That means giving a right to use natural resources to a farmer for cultivation of plants and rearing of all animals except rearing of horses for food, fiber, fuel, raw material or other similar products. For example, something like government might give a right to the farmer to use government land. Very popular, very common. Then services provided by central government, state government, union territory. Here local authority is not there. By way of deputing officers. What they are doing, sir? They are deputing officers. When the two deputing officers after officers are on holidays for inspection or container stuffing or such other duties in relation to import-export cargo on payment of merchant overtime charges. What charges? Merchant overtime charges. Service given by central government, state government, union territory by way of deputing officers after officers are on holidays for inspection or container stuffing or such other duties in relation to import-export cargo on payment of merchant overtime charges. Friends, let's say for a second, there is one person called Mr. Shivateja. Now let's say I'm importing goods from US. Now when I'm importing goods from US, my dear friends, first thing what will happen always is that goods arrive at Indian Customs Station. Goods arrive at where, my dear friends? Indian Customs Station. I repeat one more time. Goods arrive at Indian Customs Station. After goods arrive at Indian Customs Station, my dear friends, let me tell you very clearly, person in charge files a document called import manifest or import report. I repeat one more time, my dear friends. Person in charge said these all points will come back. These all points will come back once again when we go to customs, my dear friends. But now listen very clearly. Person in charge, he will file a document called import manifest or import report. Person in charge of that vehicle or person in charge of that vessel, person in charge of that aircraft, he will file a document called import manifest or import report. Import manifest is in case of vessel or aircraft. I repeat one more time, friends. Import manifest is in case of vessel or aircraft, whereas import report is in case of vehicle. An interesting point is that import manifest or import report contains contains details of goods being imported. Import manifest or import report contains details of goods being imported. So after a person in charge submit that document, my dear friends, proper officer grants something called entry inwards. Entry inwards is basically a permission given by proper officer. Entry inwards is basically a permission given by proper officer telling that fine, everything is okay, let the goods come into India. And after permission is given by proper officer, what will happen is, my dear friends, goods are unloaded. And always remember, my dear friends, goods are unloaded at approved places. Goods are always unloaded. One more time I repeat, goods are always unloaded at approved places during working days and on working hours. Come on friends, goods to be unloaded at approved places during working days and on working hours. That means they'll do unloading only at the time of working places and working hours. And this unloading they always do, my dear friends, under supervision of proper officer. But what we are telling is, proper officer, we brought the goods, night 12 o'clock goods are coming, but we want you to come and inspect now itself, because the goods are very precious, very important. We can't afford to leave the goods like that. We request you to come and inspect now itself. And when we ask something like this to the proper officer, will ask for payment of something called merchant overtime charges. What charges? Merchant overtime charges. Now, interesting point you have to understand is that on that merchant overtime charges, GST will not apply. Going back, friends, see the point now. Service provided by central government, state government, union territory by way of deputing officers after office hours or on holidays for inspection or container stuffing or such other duties in relation to import-export cargo on payment of merchant overtime charges. On that merchant overtime charges, GST will not apply. Come on friends, take this point. Kindly write this once, come on. Please write down this interesting and wonderful concept actually. Please take it, come on. If importer requests for unloading after working hours, or on holidays, then importer must pay merchant overtime charges. Come on friends, I repeat one more time. What is the language used there, sir? If importer request for unloading after working hours, one more time I repeat friends, if importer request for unloading after working hours or on holidays, then importer must pay merchant overtime charges. An interesting point to be observed is that on this, GST will not apply. That is what is the interesting catch point what you have to observe. Very, very interesting point, friends. Come on, please write down. Very, very interesting point. Please do write down, my dear friends. Come on. So what is the interesting point is all about, on merchant overtime charges, GST will not apply. That's it. That is the point. Clear? Done, my dear friends. Let's proceed. Come on, friends. Look at the next point. 65A, my dear friends. Services by way of providing information under RTI Act. CA Finance students know very well about what is RTI Act. Under RTI Act, we can seek any information, whatever we want. For which we have to pay some charges under RTI Act, and on the charges, GST will not apply. Clear, friends? Good. 65B is one latest added point. See that once. Services supplied by state government. Service is given by whom, sir? State government. Service is given by state government to excess royalty collection contractor, in short called as ERCC. Services supplied by a state government to excess royalty collection contractor by way of assigning the right to collect royalty. So they give a right to this excess royalty collection contractor by way of assigning the right to collect royalty on behalf of state government. On behalf of state government, he will collect royalty and hand over on the minerals dispatched by mining leaseholders. Who are mining leaseholders? First of all, mining leaseholders means a person who has been granted mining lease, quarry lease or license, or other mineral concession under Mines and Minerals Development and Regulation Act 1957, the rules made thereunder, or the rules made by state government under 15(1) of the Act. Anyways, we are talking about what's a service given by whom, sir? State government to excess royalty collection contractor by way of assigning the right to collect royalty on behalf of state government on the minerals dispatched by mining leaseholders. So what is happening here is that state government has given the right to ERCC. Who is ERCC? Excess royalty collection contractor. This man will collect royalty on behalf of state government. This man will collect royalty on behalf of state government, that too from whom? He will collect royalty on behalf of state government from mining leaseholders. Exactly. Friends, getting clarity, my dear friends? Now going back to the point, services given by state government to excess royalty collection contractor by way of assigning the rights to collect royalty on behalf of state government. Now see the next line. However, at the end of the contract period, ERCC shall submit an account to the state government and certify that amount of GST deposited by mining leaseholders on royalty is more than GST exempted. Definitely, because to the extent of exempted they will not pay. Beyond that they have to pay, right? On the service provided by state government to ERCC of assignment of right to collect royalty. And finally, where such amount of GST paid by mining leaseholders is less than the amount of GST exempted. That means they paid less. The exemption shall be restricted to such amount as is equal to the GST paid by mining leaseholders, and ERCC shall pay the difference between GST exempted on service provided by state government to ERCC of assignment of right to collect royalty and the GST paid by mining leaseholders on the royalty. So this particular point I'll explain you by way of an example which came in the exam. Sir, this is the paper of November 2019. In that paper, in the first question, they told Sukhdev is a mining engineer. In that, one point is there like this. He has been assigned. What has been assigned, sir? He has been assigned the right to collect royalty. He is given a right to collect what, sir? Royalty on behalf of Maharashtra government as excess royalty collection contractor. he has noticed that mining leaseholders, what leaseholders? Mining leaseholders have short paid 2 lakhs as IGST from what had been exempted to him under the assignment. So what was exempted was different, and they short paid 2 lakhs. Now this 2 lakhs ERCC will be liable to pay. This 2 lakhs, who will be liable to pay, my dear friends? ERCC will be liable to pay. Getting clarity, friends? Who is liable to pay this 2 lakhs is ERCC will be liable to pay. Clear? Going back now. See the point once again now. See from here. Come on, read out from here, friends. Where such amount of GST paid by mining leaseholders is less than the amount of GST exempted, then the exemption shall be restricted to such amount as is equal to GST paid by mining leaseholder, and ERCC shall be liable to pay the difference between GST exempted and the GST paid by mining leaseholders. So ERCC will be liable to pay what, my dear friends? The difference. Getting clarity, guys? Speak out. Wonderful. That is an interesting point about 65B. 66 already done. 68 is also over. Let's look at 69th point, my dear friends, now. So friends, 66 point is already over. 68 is also done. Now let's look at 69th point, my dear friends. See that, come on. Any service provided by National Skill Development Corporation set up by Government of India. In India, we have got something called Ministry of Skill Development, which is working extensively towards making some skill development in India for the purpose of ensuring that unemployed youth get employed. That is the whole idea behind skill development activities. Then, an assessment agency approved by Sector Skill Council or National Skill Development Corporation. Then, a training partner approved by National Skill Development Corporation or Sector Skill Council in relation to what purpose? That is important. In relation to National Skill Development Program implemented by National Skill Development Corporation, or a vocational skill development course under National Skill Certification and Monetary Reward Scheme, or any other scheme implemented by National Skill Development Corporation. Ultimately, NSDC is working towards ensuring that unemployed youth gets employed. So service given by National Skill Development Corporation is straight away exempt, my dear friends. Clear, sir? Done. So service given by somebody who is engaged in skill development activities which are monitored and controlled by National Skill Development Corporation is always exempt, my dear friends. Next point. 70th point you see now. Services of assessing bodies empaneled centrally. I repeat one more time. Services of assessing bodies empaneled centrally by Directorate General of Training. Who, my dear friends? Directorate General of Training, Ministry of again what? Skill Development and Entrepreneurship by way of assessments under Skill Development Initiating Activities. Skill Development Initiative Activities or Skill Development Initiative Scheme. That is purely exempt, my dear friends. Clear, sir? Then 71st point. Service provided by training providers, project implementation agencies under Deen Dayal Upadhyaya Gramin Kaushal Yojana. When we talk about Upadhyaya Gramin Kaushal Yojana, it means basically Upadhyaya means teachers, Gramin means villages, Kaushal means development. So basically under the scheme, they are training the tutors. So under the scheme, basically they are training the tutors, my dear friends. Otherwise, this scheme is basically like a teacher development program, basically for development of tutors or teachers in villages or rural areas. See that now, come on. Service provided by training providers, project implementation agencies under Deen Dayal Upadhyay Gramin Kaushal Yojana implemented by Ministry of Rural Development, Ministry of what, sir? Rural Development, Government of India, by way of offering skill or vocational training courses, by way of offering what, my dear friends? By way of offering skill or vocational training courses certified by National Council for Vocational Training. I repeat one more time, friends. By way of offering skill or vocational training course certified by National Council for Vocational Training. Then, next point. Service provided to central government. Observe that word. We are talking about something called service provided to central government, state government, union territory, administration under any what program, sir? Training program. We are giving training to the department officers for which total expenditure is borne by central government, state government or union territory administration. So if any service is given to central government, state government, union territory administration under any training program for which expenditure is borne by central government, state government or union territory administration, that is straight away exempt. Next point. 73rd point, my dear friends. Service provided by cord blood banks. Cord blood banks by way of preservation of stem cells or any other service in relation to such preservation. Interesting point. Sir, basically what happens is that whenever a baby is born, let me tell you very clearly, the baby is always attached to the mother's umbilical cord. To the mother's umbilical cord, the baby is attached. When the baby is born, what they do is they'll cut that cord and get the baby outside. And that cord is called umbilical cord. And that cord blood, at the time when delivery is being done, that cord blood is being extracted, and the cord blood, they do something called preservation activity. Otherwise, they do something called preservation of that stem cells. Now, what will they do with that stem cells? In the future, in the longer run, if the baby suffers from some medical issues, they inject this cord blood or stem cell into the baby body, through which any disease, whatever baby is suffering, that can be cured. And in India, there are lot of companies, lot of people who are providing the services of preservation of stem cells, and we call them as cord blood banks. Normal blood banks, they preserve the blood, but cord blood banks, they preserve the stem cells. Stem cells are the umbilical cord. When the baby is born, they cut that and they preserve that stem cells, which can be used in future health emergency for the particular child. Clear, friends? Done. 74th point already over. 74A, my dear friends. Services provided by a rehabilitation professional. What is rehabilitation professional? They are the people, if somebody became a drug addict or alcohol addict, these guys provide service to de-addict them. Service provided by rehabilitation professional recognized by Rehabilitation Council of India by way of rehabilitation, therapy or counseling. They provide what, my dear friends? Rehabilitation or therapy or counseling and such other activity as covered by the said act at medical establishments or education institution or rehabilitation centers which are established by central government, state government or union territory, or an entity registered under section 12AA of Income Tax Act, that is nothing but charitable institution. Next point, 75th point. Services provided by operators of common biomedical waste. Now, what is this biomedical waste? Sir, we all know that when we go to the hospital, when they give an injection or a syringe or something like saline bottles, whenever something like that is given to the patient, they will not throw the injection outside just like that. The injection, syringes or the saline bottles, there is a proper medical waste process which needs to be carried out. Medical waste cannot be thrown outside just like that. So here we are talking about service provided by what, sir? Service provided by operators of common biomedical waste. Service provided by whom, sir? operators of common biomedical waste treatment facility. To whom, sir? Clinical establishment. And what service they are giving? By way of treatment or disposal of biomedical waste or the process incidental thereto. So they are giving service of treatment or disposal of biomedical waste. That service is straight away exempt. Then 76th point, services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinals or toilets. Practically we find this facility of bathroom, washroom, lavatories, urinals and toilets, for which we need to pay some charges to use that washrooms, and on the charges GST will not apply. Next, 77th point. 76th, what is there in that to explain also? Nothing. Services by an unincorporated body or a non-profit entity registered under any law for time being in force to its own members by way of reimbursement of charges or share of contribution as a trade union or for the purpose of carrying out any activity which is exempt from levy of GST. Next point, very important, extremely important point, up to an amount of 7,500 per month per member for sourcing of goods or services from a third person for common use of its members in a housing society or residential complex. What is the meaning of this point? Let me explain you. That point is very interesting and in fact very important also, my dear friends. Come on, listen very clearly. Kindly please concentrate. Sir, what is happening here is that in apartments, it is very common that we will find something called RWA, which they call it as Resident Welfare Association. They will form an association like this and form a group like this, and every flat owner should pay some amount to RWA. They have to pay amount every month, my dear friends. I repeat one more time, they have to pay the amount every month to RWA, where RWA stands for Resident Welfare Association. So every month they have to pay some amount to Resident Welfare Association, and what they told is, if every month what you are paying is up to 7,500, then it is straight away exempt, my dear friends. This point is very popular. Practically in apartments, we'll always find this welfare associations, and every member will contribute maintenance or some other charges to the welfare association, and if the amount is up to 7,500 per month per member, then it is straight away exempt. And if it is more than 7,500 per month per member, it becomes taxable. Come on friends, please take this example, important. Don't relax, my dear friends. Please do write down. Some important point is there. Please write. Don't relax. So for Resident Welfare Association, where the amount is up to 7,500 per month per member, then it is straight away exempt. And taxability is only when it is more than 7,500. I'm sure we are getting full clarity on this point, my dear friends. Speak out. Excellent. Wonderful. Very, very interesting point, sir. Can I proceed and move forward, friends? Good. Let me go back. Next point. 77A, my dear friends. Service provided by an unincorporated body or a non-profit entity registered under any law for time being in force, engaged in what? Activities relating to welfare of industrial or agricultural labor or farmers, or promotion of trade, commerce, industry, agriculture, art, science, literature, culture, sports, education, social welfare, charitable activities, and protection of environment. But below point is important, to its own members to its own members against consideration. Come on, friends. To its own members against consideration in the form of membership fees up to an amount of 1,000 rupees per member per year. See that word, per member per year. Then only it is exempt. If it's more than 1,000 per member per year, it becomes taxable. Exemption is only when amount is up to 1,000 per member per year. Getting clarity, guys? Very interesting point. Clear? Come on, friends. Looking at the next point now. 78, 79, 79A, 80, 81 also is over. So with that, different exemptions are done. But some more points are left now. See that. List of services exempt from what, sir? IGST. That also we'll talk. It will just take 5 minutes. Let's complete this. Come on. Services received from provider of service located in non-taxable territory. That means supplier is outside India. Supplier is where, friends? Outside India. We are talking about a case where supplier is outside India. Sir, generally we know that if supplier is outside India, friends, generally the point is that if supplier is outside India, receiver is in India, the transaction is covered under RCM. Now, extra interesting point what we are discussing is that services received from provider of service located in non-taxable territory by whom, sir? Central government, state government, union territory or local authority or a governmental authority or an individual in relation to any purpose other than commerce, industry or business or profession. Then it is straight away exempt, my dear friends. Or an entity registered under 12AA of Income Tax Act for the purpose of providing charitable activities or by way of supply of online educational journals. By way of what, sir? Supply of online educational journals or periodicals to an educational institution other than institution providing service by way of preschool, education up to higher secondary school or equivalent, or education as a part of approved vocational education course. Friends, already we spent lot of time on discussion about online educational journals. So when it's exam, my dear friends, service received from provider of service located in non-taxable territory and they are giving online educational journals or periodicals to an educational institution, that is exempt. But other than institution engaged in providing service by way of preschool education and education up to higher secondary school or equivalent and education as a part of approved vocational course, then who else is covered? Who else is covered is educational institution engaged in providing education as a part of curriculum for obtaining qualification recognized by any law for time being in force. Then a person located in non-taxable territory, that means what? Supplier also is in non-taxable territory, receiver also is in non-taxable territory. Then obviously it will be exempt. Next one. Exemption shall not apply to what, my dear friends? Order services, online information and database access or retrieval services received by a person specified in entry A and entry B. So it's order services, it's pakka taxable. Then services by way of transportation of goods by a vessel from a place outside India up to customs station of clearance in India received by person specified in the entry. Clear, friends? Done. Next point. Second point. Services received by RBI. Services provided by RBI is anyways exempt. We are talking about service received by RBI from outside India in relation to management of foreign exchange reserves. That is also exempt, my dear friends. Service received by RBI from outside India in relation to management of foreign exchange reserves. Clear, my dear friends? Come on, next point. Third one. Service provided by a tour operator. Service provided by whom, sir? Tour operator. Come on, see that line? Service is given by tour operator to a foreign tourist Service is given to a foreign tourist in relation to tour conducted wholly outside India. So tour operator is giving service to a foreign person to go to foreign. Something like Indian tour operator is giving service to US person to go to UK. Something like that. Clear, friends? Next point. Service supplied by an establishment of a person in India to any establishment of that person outside India, which are treated as establishment of distinct persons, provided that place of supply of services outside India. It is something like export of service, on which obviously we will not pay GST. Then import of service. Come on, friends, see that line? Import of services by United Nations. Import of services by United Nations or specified international organization for official use of United Nations or international organization. For international organizations, we don't touch at all. We will never ask them to pay tax. Clear, friends? Indian government always respects the international organizations. Then, similarly, same language, import of service by foreign diplomatic mission or a consular post in India, example embassy, or a diplomatic agent or a career consular officers posted therein shall be exempt from IGST subject to the condition that, what is the condition? Come on, see there. Subject to the condition that foreign diplomatic mission or consular post in India or diplomatic agent or career council officers posted therein are entitled to exemption from integrated tax as stipulated in the certificate issued. Who will issue that certificate? It's issued by Protocol Division of the Ministry of External Affairs based on the principle of reciprocity. Reciprocity because when our people are working there, they are giving exemption there. So when their people are working here, we will give exemption. Exchange offer. Straight away exchange offer. Then, services imported are for official purpose of the said foreign diplomatic mission or consular post or for personal use of the said diplomatic agent or career council officer or members of his or her family. Then, that in case the protocol division of Ministry of External Affairs, after issuing a certificate to foreign diplomatic mission or consular post in India, decides to withdraw the same subsequently, it shall communicate the withdrawal of such certificate to foreign diplomatic mission or consular post. Then, that exemption from whole of integrated tax granted to foreign diplomatic mission or consular post in India for official purpose or for personal use of their family members shall not be available from the date of withdrawal. So if certificate is withdrawn, then exemption will not apply. Clear, friends? Done. Finally, other exemptions, friends. See that, come on. Intrastate supplies received by a TDS deductor from an unregistered supplier shall be exempt from CGST. Intrastate supplies received by a TDS deductor from an unregistered supplier that is exempt from GST. Same lines. Next point. Services imported by a unit or a developer in SEZ exempt from IGST. Then this point already we discussed a lot. Central government share of profit petroleum is exempt from CGST. Very, very important. Finally, last point, my dear friends, IGST is exempted to the extent it is paid on the consideration attributable to royalty and license fee included in transaction value under Rule 10(1)(c). So at this point, we will talk in detail when we go to customs duty, my dear friends. Because in customs, we have got special provisions of valuation where we will talk in detail on this point. But this point only says IGST exempted to the extent it is paid on consideration attributable to royalty and license fee. We will talk in detail when I go to customs. Clear, friends? These are the various interesting exemptions what we have got, my dear friends. And ultimately, one line what I want to tell before I complete the class is only that don't try to mug up the exemptions, because in exam they will not tell write 20 points, 20 marks, but the only thing required is that you should have a complete fair idea on all these exemption points, so that if any point comes in the exam and they'll ask you whether exempt or taxable, you will be in a position to identify whether it is exempt or taxable. That is what is required. That if you do, matter is done. Clear, friends? That's it. This is what is the story of this wonderful topic called exemptions. High possibility, generally question keeps coming in exam for 4 to 6 to 8 marks. Clear? Done. We will stop here and the balance will take forward in next session. Thank you so much. Take care. Bye-bye. Thank you.